Well, hello to the IE community, to our alumni, our staff, our faculty, our students, for this edition of our video newsletter. And I have the pleasure today to welcome one of our renowned, beloved, esteemed Professor Gayle Allard from the economics area of the business school. So it's a pleasure to have you here, Gayle.
Thank you, Lee. Thanks for the invitation.
Unfortunately, for not such a very good moment to have this discussion, but I think an important discussion for us to have for the community. A lot of us are wondering what's going to happen with the war in the Ukraine that's happening right now, what it means for our lives as business professionals, for us as members of society. We're all thinking about it, and so the conversation for today, the proposal is that we have a chat about what it means for our community. How does that sound?
Yeah, in some ways, of course, I'm not equipped to talk about geopolitics or international relations, but in many ways, the most interesting part about this is how it is an economic war, in the sense that it was globalization that enabled this rogue state, Russia, to accumulate $600 billion in foreign currency reserves, which would have carried it through the uncertainty following the invasion, because they could have supported the ruble so it wouldn't fall, so there wouldn't be trouble for businesses servicing foreign debt, for the government servicing foreign debt. You know, there would have been liquidity. And so, in a sense, first of all, globalization enabled Russia to build up what some people are calling a war chest in that sense. And yet, globalization also made it possible for the West to respond with sanctions that we really have never seen, in their fierceness, which froze that war chest.
And to focus on that point, on sort of the proportions of this economic war. So there's a military war, and as you mentioned, there's clearly an economic war happening. Is this of epic proportions? Is this something we've seen before, and it's just a sort of a small quantitative difference?
We haven't seen anything of these dimensions before. And I think, globalization itself, with all of us so closely intertwined, right? And Russia had integrated itself, despite having, an authoritarian system, had integrated itself into global trade, its currency, its bonds. And so, this sudden freezing, it was like the nuclear option of the West economically.
Yeah.
And I don't think it was expected. And this has changed the game. So, even if Russia were doing well on the battlefield, these sanctions would be hurting very much. And, there's a sense that Russia could go into a depression when this is all over, because the economic damage would be so great. I mean, just today, we're looking at a bond payment due on dollar bonds by Russia. It's tomorrow. And it's a crazy situation, because Russia has the money to make the payment, but it can't get the dollars out. And payment is not accepted in rubles on these bonds, they're dollar bonds. So does Russia go into default, even though it's willing and able to pay? And the sanctions have produced that situation. So just a fascinating.
And that default would be another red line cross that could push them.
They haven't defaulted on a foreign bond since 1918. So there was a default in 1998 on Russian bonds, but ruble bonds. But this would be historic. And of course, what happens to Western banks? Because of globalization, we're very integrated with them. There's a lot of Western institutions holding Russian bonds.
So would you say that the sanctions are epic in both scale and scope, or is it more? Have we broadened it because there's a more of a, let's say, a collaborative sense of these sanctions that is unprecedented in scope, or is it really just the scale of it?
Yeah, I think it's both, and I think the West said to itself, we don't want to have boots on the ground. What can we do that will really hurt? And realized, and this is under U.S. pressure, realized that the sanctions could cripple Russia. So, and China standing on the side, which had an unlimited, no limits relationship with Russia, looks at that and says, wait a minute, we're not quite ready for this one. China needs a few years to to build up. It does have massive reserves, but if those were frozen, what would China do? It's so dependent on European and American markets for growth. So China's kind of standing back and saying, wait a minute, I think we'll be careful here.
And what's your perspective on China in terms of economics, and is this, where do they come out in this?
Well,
Or
they
where
are.
could they come out? I mean, I guess there are multiple
Yeah,
pathways.
they do need Russian energy. They do need Russian raw materials. And of course, the price shock that's going to hit all of us will hit them. But I think the big story in China is that they're struggling to grow. You know, we had the Evergrande crisis. We see the real estate sector not being able to provide growth to the economy, and maybe a debt crisis emerging there. And then the demography. So China's struggling to grow, and Xi has set a target of about 5% growth, which is kind of high given China's current capabilities. So they don't want to lose markets. You know, all of us, if we look at the macroeconomic outlook, it's not good for anybody.
So yeah, what is the? I mean, you're an economist, so we need to ask you the forecast question.
Yeah, I mean, there's three bad situations that are emerging. The best one probably is the U.S. situation, which will be stagflation. So, you know, inflation rates, almost 9%, higher than they've been since the 70s, and the economy slowing down. So sluggish growth and high inflation is what the U.S. will get. And that's probably the best of all the scenarios, because what Europe is going to get maybe will be tipping back into recession. You know, their exposure to natural gas prices, their exposure to food prices, exposure to high oil prices, which for all of them is a little bit bigger than the U.S. And their recovery was not as advanced as American recovery. So, you know, this is going to hit them hard. We're already seeing tourism slowing down to Europe, again, because Americans are afraid of what's happening in Ukraine.
So any hopes for, I mean, post-pandemic, we'd like to think we were on at least a path towards some recovery.
We were. It looked pretty good.
Have we now taken a U-turn, and are we?
It's derailed, yeah.
It's derailed.
Yes. And even if the war ends soon, which hopefully
yeah.
that will happen, doesn't look likely, still these high prices have struck the economies in such a way that we're going to suffer this inflation for some time. So, and then Russia facing a deep recession.
Is any region or any sector going to be protected from what's going on, or is this across the board?
Well, oil exporters that don't rely on food imports could do pretty well. So, and I don't know who that includes. I know that Russia and Ukraine exported a lot of grain, a lot of wheat and corn to the Gulf region. But I don't know specifically if there are some countries that might be able to squeeze out of that, because high oil prices are a boon for it. But the region I'm really worried about is Africa, because in Africa there are many countries where food is 50% of consumer spending. It's 5% in the U.S. So you raise those prices by more than 50%, and you know, some people are going to be deciding whether to eat or not. And they were already struggling from the pandemic, right? From climate change. It's just a perfect storm.
And what about, I mean, taking a slight turn in the conversation. So companies have tough decisions to make now with respect to their stance, their operations, their international operations. With respect to ESG, especially, how do you think about that? I mean, what does this mean for ESG and corporate decision making?
It's been a sort of a litmus test of companies' social responsibility. In fact, people are talking about corporate political responsibility instead of social. So we're going to have to add some more letters into the acronym. But companies are under pressure from stakeholders to disengage from Russia because of the invasion. And yet they're looking at different scenarios. So there's some companies like British Petroleum that said, okay, yeah, we're in partnership with the state. We got to be out of there. But there are other companies that employed a lot of Russians. I'm thinking of Danone, which employed a lot of Russians and provided food for the Russian people. And they've said, you know, actually, we're not going to leave because we have no problem with the Russian people. It's with the Russian state. And so, you know, these kinds of decisions have been complicated. But some people say that the conflict is going to take the E out of ESG because they're going to lose the focus on the environment. They're going to stop pursuing green objectives. And
What do you think? I mean, if you had to predict, people are saying that, do you think it's going to happen?
well, I think the pressure for environmental responsibility is really strong. And we've always said that in order to cross that bridge from non-renewables to renewables, the bridge is sort of natural gas. And Europe was pretty advanced on that bridge. But we've always said that what is going to push us over is the high price of non-renewables. I mean, that's necessary. So maybe it's going to push Europe over to the other side, but maybe it's going to push the U.S. back towards non-renewables because we've got a lot of petroleum. We're pumping more now. We've got a lot of natural gas. Coal production is increasing even in Europe. So kind of hard to say which way we're going to end up on that.
But away from dependence on Russian oil.
Hopefully, having to disengage from Russian oil will push us over to the other side of the bridge, but we will see.
And what about, I'm wondering about currency. So, there's a lot going on with currency. There's this let's say, very strong movement emerging, let's say, in pockets of society around the world towards, I don't want to identify my wealth with a particular country. I want to manage it myself. And so, we have the rise of crypto and this kind of, it's my money, I want to put it where I want and I want access to it when I want and in a secure way. Is this going to catalyze anything with respect to world currencies, to our perspectives on how we store wealth, how we hold our wealth?
Yeah, if there's a bit of deglobalization after this, that could push us in that direction. With crypto, I was one of the people who said immediately, oh my gosh, it's going to go up in value because the Russians are going to be using it to get their money out. But that didn't happen. It rose a little bit, and then, the different currencies. And then they fell because some of the exchanges are blocking Russian transactions. And, they're fairly active. But we also have to remember crypto is only, 3% of global assets. It's very small.
3%.
Something like that. It's a very small number. So, I don't see that very clear. I don't know. It's the mighty dollar again now, as it always is in crisis. Euro's down. Of course, the ruble's way down. The yuan has held pretty steady, and that makes the Chinese happy. But as far as rising as a percent of global transactions, we're not seeing a strong trend there yet. Yeah.
And are there implications for for us as individuals or for institutions in terms of wealth management and where we put our money?
Maybe we may have more fear in the future, right? We may have more fear of being exposed to something like Russian bonds, even though Russia was a very well-managed economy. It was, debt levels were low. They ran budget surpluses, and so Russian debt was very attractive. But to see how overnight those bonds can be trading at 20% of their value. And you may not even be able to get payment. I think this is going to scare people for at least the short term. We do forget things, don't we?
We do.
This time is always different.
Short, but to move towards more safety,
maybe,
in a sense,
yeah,
is what
maybe.
Does that imply?
Yeah, because in moments like this, investors don't go into emerging market currencies. So it's not just the ruble. They're pulling out of a lot of emerging market currencies, as they always do when there's fear. Now, when this is over, when will it be over? When this is over, maybe that will pass. But I think in the short term, we're going to see the flight to quality intensify.
Okay. Well, thank you very much for your thoughts. I know this is very interesting for our entire community. And it's a very difficult and challenging time for all of us here at IE itself and out in the world. And I know a lot of people are going to be connecting to this to have heard what you had to say. And so hopefully this is very helpful for them. And thanks for your time.
Thank you, Lee, and greetings to all of you. Really nice to see you virtually. Anyway, let's hope it's over soon.
Thanks very much.